Karma hasn't given the CAC the powers to change any provision that regulates companies limited by guarantee. So the fact that a company limited by guarantee can't transfer its shares, CAC can't now say, yes, the NSA can convert to a company limited by shares based on that section, because the omnibus power can only be, as it were, come to bear in implementing the provisions of Karma. So they can't go outside what is already provided for in Karma to allow for the NSC to demutualize. So for me personally, it's either to come up with a demutualization act or amend Section 26 of Karma. And I think that is because irrespective of the benefits, irrespective of the rules that the Securities and Exchange Commission has actually established, if the exchange cannot demutualize, it can't happen. So that legal framework has to be settled. It has to be settled what process. In fact, indeed, one of the plans that the NSC is supposed to submit to the Commission is tell the Commission what process do you want to take in demutualizing, and which is in fact very key. All other requirements of the rules, I'm sure the NSC will be able to comply with once it's able to actually map a roadmap as to the process it will use in demutualizing. I think for now I'll just stop here. Thank you.
Well, I'm happy to hear that Mrs. Brimo said that's just for now. She has raised some pretty fundamental questions as to whether this thing can happen at all. I think in view of that, it may be important that we hear from the lawyer on the panel, Mr. Abosi, to see if indeed we have an exercise at all to pursue.
Thank you, Mr. Moderator. Good morning, ladies and gentlemen. Let me assure you that I was supposed to be on this panel. It wasn't by accident. It's not like they changed their mind at the last minute and asked me to come. What Anastasia has said, it's an issue that's been on, and especially if we are going to go to the level of bringing in new investors. People need to be certain that you are transferring proper title to them. So from the very beginning, we need to be sure that the legal process is right. Trading rights, members, the stockbrokers have trading rights, but the due diligence has been completed. I've been interested, to know what has come out of the due diligence exercise. That is key in deciding how to go forward. Because really, if we do not have people who have title to the ownership of the stock exchange as it is now, how is it going to happen? Who is going to transfer title? Due diligence is key. Any person, any investor, and back in 2011, when this came back to the front burner, most of the inquiries we got from people who were interested in was, who owns the Nigerian Stock Exchange? The stockbrokers say we own it. And the government said they put up money back in 1960 when the stock exchange started, which means that the federal government feels it also has a stake in the Nigerian Stock Exchange in terms of ownership rights. So we'll have to find a way around this. That is the first thing we need to do before getting into the issue of whether a company limited by a guarantee will be able to transform to a limited liability company, whether it's private or not. I think sequentially the issue of ownership needs to be sorted out first. The second one, I think I'm not as concerned about the second issue because really it's going to be a question of legal engineering. A company that is limited by guarantee is not one of the companies under the KAMA that is allowed to transform to another type of entity. So it means we would have to look into the existing provisions and find a way around it, or the alternative will be to go to the National Assembly to pass a law that will enable demutualization to take place. But that also comes with certain dangers. Is this going to be perceived as an expropriation of rights if, back to the first issue, we're not able to determine who the owners are. And again, I'm speaking only advisedly because I don't know what the outcome of the due diligence has been. So there are two ways around this. We probably do need to, if we are unable to find a way around the existing provisions of the CAMA, which is what I think we should explore first. I'd always considered the provisions about scheme of arrangement. But again, don't forget that the people who can only vote to pass a scheme of arrangement need to be shareholders in the first place. And secondly, this company doesn't have shares. So 75% threshold to be able to pass a scheme of arrangement is a bar. So I don't have all the answers to it. I don't have the answers to that now. But those are, I'm hopeful that the people on the panel who were part of the due diligence exercise will be able to tell us what has come out of it. But the first thing we need to do is to determine ownership. Secondly, is either we pass an act or we amend the CAMA as it is to allow allow them to be able to either transform into a limited liability company or move the business as it is to a newly incorporated limited liability company.
Thank you very much for that intervention and for the unusual modesty of a lawyer to say he doesn't have all the answers. So why don't we turn to Michael Labi, who perhaps with his more global and international perspective may have encountered the answers that we are so desperately seeking.
Thank you, Mr. Moderator. I'm actually somewhat conflicted, so it depends on how you want me to speak. So we're advising the exchange alongside Chapel Hill, and also I've personally been involved with some exchanges. I think in the interest of giving context, I'm going to stay away from what we've done so far with the exchange. I'll let Oscar speak to that, but I'll talk about some of what we've encountered globally as we've gone through. So I think most of what Kalu summarizes, right? We've seen several variations of it in different markets. So also to Anastasia's point earlier, in some markets, a demutualization act has been put in place specifically for that, and the legislatures have also embraced the process and made changes to existing laws as they exist. I think on the issue of the ownership of the exchange, it's important for one to look at the journey. The exchange may have been mooted and government may have supported it initially, but one is also mindful as a going concern, it does take participants to create value. And there is a school of thought that generally would say the members of the exchange, particularly the dealers, constantly trade and add value, and over time would have added value. So we need to really look at it. Majority of the situations where demutualization have taken place globally was a lot simpler because the members actually own the exchange. So we have a unique situation with our mutual company backed by a guarantee. But that in itself also needs to be looked at. What's the history of that? So when you go back to the initial formation of the exchange, it actually was a company that had shares. And there were initial members that subscribed for the shares. Now, along the way, we've gone through several laws, and with CAMA coming into being, it stipulates that we can have mutual organizations limited by shares, but then we had the mutual organization limited by guarantee, which didn't have any shares in line. So there's a need for the history to be reviewed. There's a need for open-mindedness around how we assess it. So the ownership journey is tricky, but I think there are global precedents that can guide us as to where we get to. And I come back to the premise lies on value creation. The premise lies on value creation. The exchange post-demutualizing is still going to need is dealing body. These are the dealing bodies that are going to add value. And we can talk about the value created that sits in it today, but it has been created over time by members, and one needs to consider quite quickly. I just want to touch also very quickly on the structure. I think a lot of structures have been adapted in different markets based on what regulatory framework existed, but also what made it easier to do. So to Carlos' point, there are several options that we're looking at. We're going to review them and ultimately adapt the ones that are transparent, fair, efficient, allows us to get to market quickly, but within the confines of the law. Thank you.
Thank you very much. I think before we come to the three people remaining on this panel who are most involved in this, we should get perhaps the last objective view from Ike Chioke before coming to those three.
Thank you. And may I stand on all existing protocols? It's an interesting dilemma when we're thinking of demutualizing an exchange, and from global precedents, you're talking about which used to be together, but clearly from this panel we've discovered that the issue of ownership is actually in contention. Do the brokers own the exchange? As daily members, do other ordinary members own the exchange? Does the federal government be part of that ownership? So it's really a very interesting question that the advisors to the NSC have to battle with, and then of course sort it out with the SEC as part of the process. But if I were to think about some corporate finance ideas around it, perhaps it's not quite going for a scheme of arrangement because you don't have the ownership in the first place to utilize. So you may have to think of other approaches, which will be that the exchange and would have to have a decision as to who's actually the owners today, and that's the starting point. And do you include the federal government? Do you include other stakeholders that could say the investing public? You know, does the federal government act as a proxy for them? But if you determine the owners, then that's a starting point to then say we can then consider a scheme of arrangement or a spin-off, and then start the actual process of considering which parts of KAMA to use, or whether we are going to set up a new demutualization act. But these are interesting areas. As a non-advisor to the NSC, I can't go further. But one other area that would worry me is if you actually achieve demutualization, then you have the dilemma that a self-regulating organization is now a profit-making entity and introduces new dimensions of conflict. Does a newly demutualized exchange, if it tries to seek to make profits, is there a potential that it can then go ahead and introduce arbitrary new fees to companies that are listed on the exchange? Or would it introduce new penalties that are not appropriately managed? Or would it lower its supervisory function because it wants to encourage more, certain companies to come to the exchange? So there are quite a number of post-demutualization issues that both the exchange itself and as well as SEC would need to be mindful of, when we get there. And I do believe we have enough capacity within all the professional parties working around here, and of course the people in this room, to get to that promised land one day. Thank you.